Good afternoon to the delegates, the presenters, and the organizers here today. I have to just say, Guy, what you guys have built in the last 2.5 years is quite phenomenal to experience in person. I had the privilege of meeting Guy about sort of 8 months ago now, I think it is, and really fascinated to see this conversation that we have actually come into reality. So congratulations to you and your team and to everyone in this room here today. The FIA is absolutely excited to be part of this first face-to-face annual conference that Fairbairn is hosting. They have only given us 15 minutes to present a case for change and sort of what the FIA believes based on sort of our member diversity and input on what sort of the future what the FIA believes will be driving sustainability and future resilience of advisory businesses. So just a little bit about who the FIA is. We are the Financial Intermediaries Association. We are a very rich organization in diversity and culture. We are a multidisciplined organization, so we have non-life members, life financial planning, investments, which are predominantly the DFMs. We've got employee benefits, and we've got healthcare, and we've got non-life. So those 5 insurance disciplines really enrich the organization, because you can imagine that some of our member businesses are multidisciplined, some of them only specialize in financial planning. We have 12,000 key individuals and representatives also on a national basis. So if you're not a member of the FIA and you want to engage in our networks on a national basis, please certainly do so. We are one of 4 recognized trade associations that represent business in the financial services sector. So you've got the FIA that represents intermediaries, you've got BASA that represents the banks, you've got ASISA that represents the life insurers and asset managers, and you've got SAIA that represents non-life insurers. And the financial sector is a very big sector. It's the biggest contributor to GDP, so our engagements with stakeholders, government, and regulators is very important. Just very quickly, what do we believe? What gets us out of bed every day? Why are my team here? Why are we so committed to what we do? We believe that clients benefit from independent financial advice. We believe that intermediaries play a critical role in the South African economy. And to talk to Guy's point earlier, we are also strong advocates that you are the gateway for entrepreneurship in our sector. Many of you in this room are entrepreneurs, and you choose to engage your businesses in structures like Fairbairn Consult, which we see as a global trend, making your businesses more efficient and effective. Professionalism, risk management, and risk mitigation, we believe, are imperatives for FSPs to ensure that the future of our sustainability is considered, and that development of your FSP will be enabled through transformation. And I know this discussion is not about transformation today, but it is a key focus area for us as a business, for us as a trade association, for our members who are businesses, and obviously for government and regulators. Just to put into context, to almost give emphasis to the case for change, I just wanted to share with you the monetary impact of 3 catastrophes that have happened in the last 3 years. In 2021, non-life insurers paid out 38.8 billion rand in claims, and the biggest contributor of that was the July riots, so that was 24 billion. In 2022, indicators are that claims paid for the KZN floods will exceed 7 billion. But this is where it gets interesting. In 2021, policyholders and beneficiaries received claims and benefit payments worth 608 billion rand from South African life insurers, the highest ever paid in a single year. And if you combine 2020 and 2021, the first 2 years of the pandemic, life insurers paid claims to the value of 1.1 trillion rand, thereby supporting the economy in a time when many industries were paralyzed. by measures taken to prevent the spread of COVID-19. So as advisors sitting in this room today, you should be incredibly proud of the job that you do for clients and for this economy. You cannot comprehend the impact that these losses would have had on our country if it wasn't for risk protection. So we want to just talk a little bit about the changing risk landscape, and this is really based on insights from members and industry associations like the FIA across the world. I think we can all appreciate that the risk landscape is changing and that FSPs should be paying closer attention to this. So according to the World Economic Forum Global Risks Report for 2022, societal and environmental risks are a huge concern for respondents. So just looking at our weather-related events and the social unrests last year, environmental, social, and governance risks are perceived as very critical long-term. So as advisors, you can exclude this from your engagements with clients. However, your clients are operating in this ecosystem within which these realities are taking place. And we can already see from our engagements with the International Association of Insurance Supervisors, with the OECD, with our local regulators, that ESG is going to be embedded in our legislative and regulatory frameworks. So I think the question that we have to ask ourselves is, how do we as advisors incorporate these strategies into our processes? I think just very quickly on this slide, and we'll come back to the case for change, it's the importance of this slide is the role that advisors play in terms of consumer education and the risks and strategies that you give to help clients protect their most valuable asset, and that is their life, their ability to earn, the ability to support their families and businesses. And often when you ask people what's your most valuable asset, they underplay the importance of their own life. And advisors do such an incredible job at that. And also the need for advice has escalated post these catastrophes. I know how much you love regulation. This is going to be, I just thought, I'm not going to spend too much on regulation, but people like Guy and Dirk, your compliance officers, will have a fresh appreciation for these 5 big drivers that are going to have a fundamental impact on FSPs in the next 3 to 5 years. The first is COFI. With the advent of COFI, the whole financial services regulation is going to be affected in that several pieces of existing legislation will be repealed and substantially changed. The FIA is actively involved in working groups through NEDLAC, which is Business Unity South Africa, as well as the FSCA, to really assist and guide the regulator when they develop conduct standards for your business. In Namibia, 160 conduct standards were developed. Can you imagine what that would do to FSPs in this country? So we are paying very, very close attention to what's happening on COFI. All FSPs have to report in terms of the financial sector codes. You have to report to the FSTC on an annual basis. This is very costly and expensive. The omni-conduct of business returns. My colleague over there who looks like a juicy Granny Smith apple, that's what we have agreed we're going to call you that. Her name is Samantha Williams. She's head of legal and regulatory affairs at the FIA. She's a financial services regulatory expert. She'll tell you those omni-conduct returns, what is going to go into that for FSPs in terms of your reporting. And it really talks to the business case of partnering with organizations like Fairbairn who can take that pressure off FSPs. But we're actively engaging on that, and it's very costly, it's time-consuming for businesses, so we're paying close attention. And the big one, obviously, is the Employment Equity Amendment Bill. It will have a major impact on designated employers who employ more than 50 people, irrespective of your BBBEE level. So these are very big, as I say, shifts in regulation and legislation that the FIA is actively involved in. Here's the crux of it. So what we've done is we've taken sort of information from our members, we've taken information from what we've heard through our international associations, and we really bring it down to these sort of 8 key points. Reshape, and Guy has already spoken about that, reshape the way we engage our clients. What we did before is not good enough for where we're going tomorrow. So we really need to challenge ourselves in terms of how we do that. Technology enablers such as robo-advice should be doing the easy lifting in your business. Automate as much as you can without losing the relationship with the client. This is your essence. This is your gold. We cannot lose the relationship with the client, but automate where you can. I think the important part about technology enablers, and I'm interested to hear what comes through today, we think there's a huge opportunity to invite new clients into our industry and use digital platforms where there's a single need. Your biggest asset is your time, and you cannot, it's just not possible for you to meet with every client who has a single need. So how do technology enablers assist you in introducing those clients into your business? We speak about increased transparency with clients. This is a big one, not only for regulators, but for businesses in general. Educate your client to be a part of the financial planning process. You know, through COVID, we see how quickly it is to blame your financial advisor. Oh, my financial advisor didn't tell me there was a pandemic. They didn't tell me that the markets were going to tank. How do you expect your financial advisor to have foresight into the uncertainty and the volatility that we've seen over these last 3 years? So it's critically important that we use technology to help our clients to be a part of their financial planning process and to take responsibility. Take responsibility, understand. Don't just hear what your financial advisor says and, okay, I'm going to put my head in the ground. That's what they've said I must do and I must just do it. Take the time, understand it, and give your client the tools in order to be able to do that. And I know this is not a conversation for right now, but it also reduces the liability risk on your FSP. We've seen how FSPs are being affected because of this risk, and they just take on more and more risk in their businesses, and it really is something that needs to be managed. Technology can bring down the cost of financial planning. This is absolutely important. I can assure you, and my colleagues will testify, when we have discussions with National Treasury, when we have discussions with industry stakeholders, we get accused as a sector of being elitist. You're only interested when I've got money. You're only interested when I've got assets. What are you doing to help the lower entry and the lower income markets to get access to financial advice? So this is something that we believe is absolutely going to be a shifter in the future. If there's a way in which we can reduce the cost of financial planning and make it more accessible. I think transitioning from product selling to holistic financial planning, you guys all know that. You wouldn't be in this room and successful probably if you weren't doing that already. But I think we're all on the same page that product selling has come and it's gone. You need to really get a holistic view of your customer. And that's also where technology is going to make a big difference. The two last points around future clients are comfortable engaging digitally. I think we all know through COVID we were forced to engage digitally. I've just come from Australia where I have to use my phone to do absolutely everything, whether it was standing in a virtual queue, whether it was ordering my food. It drove me completely bonkers. But at the end of the day, that is what people have become accustomed to. They are comfortable engaging digitally, so we really need to be open to looking at ways in which we can embrace that in our businesses. And the biggest transfer of intergenerational wealth is on your doorstep. We cannot emphasize enough how important this is, that this be incorporated into your strategic thinking in your business. Many of our members have said that that wealth is being passed down to that next generation, and that next generation is not sitting here. I'm not quite sure who mentioned it. They could be sitting anywhere in the world. So how are we incorporating that opportunity into our businesses? And this is my final slide, 55 seconds to go. And I want to say this excites me the most. This gentleman, Mr. Abdul Varachi, who's the senior faculty and strategist at Gibbs, he wrote, "The fuel of the future is the superpowers of skills that cannot be digitalized." And that is exactly why all of you are still in the room today. And based on the World Economic Global Forum report, 41.8% of world experts believe we will operate in consistently volatile markets with multiple surprises, and 23% of respondents are worried about the outlook of the world. That should excite us. The more uncertainty there is, the better and the more demand there is for financial advice. But I want to end with this. Intermediaries are going nowhere soon. We are not threatened by disintermediation. We have never been, and we will never will be. We have a track record of immense resilience. So, I mean, you've heard 1,000-odd years of experience. I mean, we've got the track record. But the case for change is based on the following. It encourages innovation. It develops skills. It develops staff. And mostly, it creates opportunity. And that's my statement. And why there should be a case for change. Thank you very much.